If you run an Airbnb, there are some important tax considerations to consider when going to sell your property. A new court ruling just released this data for the CRA and some new tax in HST applicable to a sale of a property. Let's break that down. I'm Michael Ouzas. I'm a realtor here in the city of Toronto. If you ever want to discuss the Toronto real estate market and what's going on the ground level of Toronto real estate, you can click on that first link in the description down below. A new court ruling just came out, and it turned out that the plaintiff had to pay 13% in HST when it came to selling their property, which is a pretty hefty bill on the sale price over and above any selling costs. And this may have also came after the sale had completed if it was a court ruling with the CRA. And here's the article. This is actually posted on BlogTO, but they pulled it from the Toronto Star, which we'll get to in a second. It says hefty tax now applies to certain Canadian Airbnb and other short-term rental owners. If you regularly rent out your home on Airbnb and other short-term rental platforms, expect to be hit with a hefty tax when you sell it. The Tax Court of Canada recently ruled that homeowners who frequently rent out properties as short-term rentals are subject to paying 13% HST when it's put up for sale. The tax applies to any residents consistently rented out short-term sites like Airbnb, VRBO, condos, townhomes, and single-family homes, all included. And it would be applied to the home's total price when sold, meaning homeowners could be taxed tens or hundreds of thousands of dollars. Usually residential home sales are exempt from HST, so this ruling will affect investment property owners. And this was posted on the Toronto Star, and it says taxpayers who sell or have sold Airbnb units are now on notice. The CRA is watching. This was just on October 24th, 2024. The market for Airbnb houses and condos likely to take a significant hit in the wake of a ruling earlier this year by the Tax Court of Canada, which held that the sale of a used residential property rented out at Airbnb is subject to HST on the entire sale price. Court decision came in an appeal that a tax assessment by Number Ontario Inc. company is owned by brothers David and Dean Ross, and it was in February 2008 where the company, so they purchased it as a corporation, purchased a resale condominium on George Street in Ottawa. They rented it out for 9 years to tenants under a long-term lease, and in the last 14 months of ownership decided to put it on a short-term rental platform, Airbnb. The income was $11,1200 in 2017 and $43,000 for first 2 months of 2018. HST was payable on the rents for that period of time. It was sold back in 2018 to another holding corp for $670. Neither the seller nor the buyer paid HST on the transaction, presumably treating it as a resale residential property, which would be exempt from tax. Sometime after closing, the Minister of National Revenue assessed the former owner with a pretty hefty $77,000 HST payable on the sale of the condo. The court ruling was in 2023 in September, and as a result of commercial rental operation during that time, the entire sale price of the condo was not exempt from HST. So let's break that down just a little bit. And there are a couple factors to factor in here, especially if you're considering Airbnb in the city of Toronto. The first one is, should definitely get professional accounting advice if you are considering doing any kind of rentals, especially when it comes to a corporation and anything like that, because the rules are different than if you are just going to rent the property out as a standard, for example, 12-month long-term lease. And the other element of an accountant is knowing some of the tax rules when it comes to renting your property out long-term, short-term, and everything in between, especially every year as you do file taxes on that property. And that rental income does count as income. So there are a bunch of write-offs and different things to discuss with an accountant, and you can do so beforehand so you know the ins and outs. The second element of that is that this was a corporation who rented the property out long-term on Airbnb, so for multiple months in a row. And what's interesting about that is that in cities like Toronto, for example, and in that article it does mention that if it's rented 90% of the year over on Airbnb, then that's something which would be taxable. In Toronto, we do have rules, and the rule is 6 months or 180 days of the year is the maximum that you can rent out your condo or house on Airbnb. And if those rules are 6 months, then this tax may not apply. And again, that's where that professional account advice is super important to go through. The other element of it is knowing whether or not Airbnb is beneficial for you as a property owner. The rents are definitely higher. There's no question about that. So you'll get more per day if you're renting it out on a short-term platform. However, there are some things that you must consider when you are renting things out. If you're renting it out for one day and your rent is $200 for that day, that sounds great on a monthly basis. That'd be a $6,000 a month rental. However, you're paying $100 plus any rental fees to get that property rented. That $6,000 a month goes down to $3,000 very quickly. So just something to consider if you are considering that Airbnb route. The other element of it is knowing when it comes time to selling what these tax implications mean and factoring that into your closing costs. This court hearing came years after the sale. And if you weren't expecting that kind of hearing or that kind of tax later down the road, that's a pretty significant bill to get a few years after you've already sold and moved on from that property. So these are important considerations to factor in when it comes time to renting your property out short term on any of these platforms. I also have other videos on the channel that discuss how you can successfully rent out Airbnb and what are some of the things that you want to do to set up your property for short-term rental success. Again, keeping in mind that you do have limits, especially in a city like Toronto. I'd love to hear your thoughts in the comments down below on this recent tax rule here, which has been blowing up all over social media. I'm Michael Ouzas. Thanks for watching.